Trading isn't just about making money. It's about making money on the long run. My name is Caleb Johnson, and this is Beo Forex Academy. Today, we're going to be doing a little math. Now, this math is important to you whether you are a beginner trader or an advanced trader. This math is about risk to reward ratio. Now, what is the risk to reward ratio? The risk to reward ratio is just a way of evaluating your trades by comparing what you are willing to risk with how much you hope to gain. Let's take a scenario, for example. For every $1 you risk in the market, you should be hoping to get at least $2 or $3. So the risk to reward ratio, as I said, is expressed in form of ratios. A 1:2, a 1:3, a 1:5, or even a 1:10. Now, let's have a more concrete example. Let's say you want to buy Euro USD at 1.1. For example, and maybe after careful analysis, you decided to put your stop loss at 1.0950 and you decided to place your take profit at, let's say, a 1.100, for example. So if you do this, to calculate your risk to reward ratio, you're going to need to know what your risk is and what your reward is. So your risk is going to be gotten by subtracting your stop loss price from your entry price, and your reward is going to be gotten by subtracting your entry price from your take profit price. So let's see what that's going to be. If you subtract your stop loss price from your entry price, you're going to get 50 pips. That is 1.1 minus 1.0950 is going to give you 50 pips. And then your reward is going to be gotten by subtracting your take profit price from your entry price. So 1.100 minus 1.1 is going to give you 100 pips. So your risk to reward is going to be gotten by dividing your reward by your risk. So that is going to be 100 divided by 50, and that's 2. So that's a 1:2 risk to reward. So on that trade, if you risk $100, you're hoping to get $200 in return. Why is the risk to reward important? The risk to reward ratio is important because it helps you to reduce emotional trading. You're not going to have to worry about making a loss because you know that if you eventually make a profit, it's going to cover up for the losses that you have made, right? Good. Now, the second reason why the risk to reward is important is because it protects your account. Like I said in the beginning, Forex trading isn't just about making money. It's about making money in the long term. So whether you make losses today and profits tomorrow, with a solid risk to reward, you are sure that your account is going to be safe on the long run. Now, the third reason why the risk to reward is important is that it gives you a strategic edge in the market. So let's take, for example, that you take 10 trades, and out of these 10 trades, you lose 7 and you win 3. And you are risking just $100 per trade. So at the end of the day, for 7 trades, you have lost $700. But for the 3 trades that you have made, let's say with a standard 1:3 risk to reward ratio, you have made $900. So you see that your reward trumps your risk every time, right? And that is the goal here, making money in the long run. It's time to practice everything that we've talked about, right? So let me give you an assignment. Pick any currency pair that you're comfortable with, go to the currency pair, and then place a theoretical trade, right? Let's say you want to risk 40 pips on that trade, and then let's say you also want to have a 1:3 risk to reward ratio. Go to the comment section and then tell me which trade you picked, tell me the stop loss size, tell me the take profit size, and then tell me what your risk to reward ratio gave you as a profit. And I'm going to see you in the next video. But before I go, don't forget, trading isn't just about making money, but making money in the long run. So I'll see you in the next video. And don't forget, you should be trading.